Hey traders, how's it going? Hope everybody's doing well. Hope you've been trading successfully, having a lot of green days. Today, we're going to talk about the pros and cons of trading actual stocks versus trading options. And I'm going to explain to you why I definitely prefer trading options to stocks. There are a number of reasons for this, and I'm going to get into them in just a minute. And we're going to do a little screen share, and I'm going to show you visually an example of what I mean. But first, just wanted to say hi again. I know it's been a minute since I made a video, and some of you might be saying, oh, well, what's happened? Why haven't you made a video? There's a couple of reasons for this. First of all, I've been traveling for nearly the last month. I was actually in Miami enjoying some nice warm weather over Thanksgiving, and just got back to one of my two home bases. And, so now I'm sort of, back in the normal swing of my daily life. But even when I was traveling, I was doing trading, just like I always do. And one of the reasons why I didn't make any new videos over the last few weeks is simply because I've just been doing what I always do and having similar results that I always have. Like one day might be a $2,000 day, and then a $700 day, and then a $3,500 day, and then a $300 day after that. So, just sort of typical performance. And I've said this many times on this channel, I don't want to keep on making the same video over and over again. And the reality is I basically do almost exactly the same thing every single day. And if you've watched any of my videos, you know that I follow a trend strategy. So I will identify a trend, spot the right time to get into the trend based on a number of factors, including support and resistance levels, certain EMAs, certain things that I'll see on indicators. I'll get in at the right time, ride the trend, make the money off the trend while it's going in my favor, and then just make sure that I have exited all of my positions by the time the trend has exhausted itself. And this is essentially what I do every single day. So, it would get boring for me to make the same video over and over and over again of me going, oh, well, here's my entry. See, I ride the trend and then I, get out. Like I've made that video a million times already. So it would be boring for me to continue making the same video. I think it would be boring for you to keep on watching the same video. And that's why I don't make content when there's not something new to actually talk about. You think about certain YouTube channels, they have the luxury of, by the very nature of what they're talking about, they always have a new subject matter. So, for example, if you look at a camera review YouTube channel, those people always have something new that they can talk about because there's a brand new camera that gets released practically every single week. So you've just, innately got this built-in new batch of content that you can create all the time. But when you're like me and you essentially do just the same thing day after day after day, you have to wait until there's actually something new to talk about. And I received an email the other day, and it actually gave me an idea. Like, wow, I don't think I've ever talked about this particular thing on a video before. So this would actually be a really good thing to make a video about. And so here I am. And I'm going to get into that in just a second. But before I do that, I also just wanted to say that I've heard from a lot of you about how well you've been doing, and it's really, really cool for me to know that I have helped so many people to either strengthen their skills that they've already had or actually turn them around if they were losing and now they've become, consistently profitable. That's really, really awesome. I have a couple of things that people have written me that I just wanted to call out here. I've gotten a number of really, really nice emails from people, but a few of my students, one guy, Carlos, wrote me and said, quote, "I have been grinding to get a positive cash flow and on the works for the past 2 years. I have finally found a strategy that I'm starting to get profitable. In the past 22 days, have had only 2 red ones. This is amazing. This is like a 90% win ratio. I mean, this is just as good as I have a lot of the time. So Carlos is doing awesome by following my teachings, which makes me super happy. And then another guy, Lee, said, "This helps a lot, Patrick. I just recently became able to trade full time. I'm coming along pretty good so far, still working on better entries. Very excited and thank you." So Lee has been able to become a full-time trader thanks to, I can't say that I, take 100% responsibility for him being able to become full-time. That's really up to him, just like it's up to all of you to trade on your own because I'm not there over your shoulder watching your every move. But I'd like to think that he took a lot of my teachings and implemented them into his trading, and that makes me really happy. And I've had a bunch of other people write to me and basically say that they've had a lot of success because of using a lot of the techniques that I have taught in both of my video courses and both of my books. So thank you very much for that. It means a lot. And so yeah, I'm just kind of rambling now. Let's get into the screen share. I'm going to show you why I prefer trading options over trading stocks. Let's get into that right now. Okay, so as promised, I'm now going to go over the main points of the differences between trading the actual stock and the options on the stock. Now, there are definitely more differences than what I'm about to explain right now, but these are just the main points as to why I like to trade options rather than stocks, at least in a day trading way. So let's get into it. What are some of the pros of trading stocks over options? The biggest pro to trading just the straight up stock over the option on the stock is the fact that there's no time decay. When you buy a stock in a company, you're essentially buying a little piece of the company. So if you buy 1 share of the stock, that represents like 1 portion of ownership of that company. And the price of that stock could be anywhere from 10 cents to $1,000. It's wildly vast differences in the price of individual stocks. So depending on what you're trying to trade, that will determine what the actual price of the stock is. But that's the most obvious difference and the most obvious pro of trading the stock over the option is just simply the fact that there's no time decay. The next pro of trading stocks over options is the fact that there's less time commitment required on a daily basis, meaning if you buy stock, you are buying stock in a company that you think will have an upside over a longer time frame. And therefore, you're probably not thinking about getting in and out of the stock in 1 day or even a week. You're probably thinking about owning the stock for a lot longer period of time. And therefore, once you buy a share of stock, it's more like a, set it and forget it sort of thing. If you've decided I like company, whatever. I'm going to buy a couple of shares of stock in this company because I think that over the next 6 months or over the next year, that company is going to do great and my stock will appreciate. You buy the stock and then you basically forget about it. I mean, you might check in every day or every few days or whatever and be like, how's my stock doing? But you're certainly not sitting there looking at a screen from the minute that you buy the stock until the minute that you sell it. That's just not how trading stocks usually works. So you don't need to sit there and keep your eyes on the screen all day, every day when you buy a share of stock. And so that's a pro of trading stocks over options. And then third, what I touched upon briefly already, equity. When you buy a stock, you're essentially buying a little piece of ownership in that company. And so, like for me personally, I don't care about this at all. I don't care if I own a piece of a company because I don't get any sort of emotional attachment to companies. But if there's a particular company that you feel a real type of way about and you just absolutely love that company and you're invested in it and you say, I want to be a part of this company, and it makes you feel really good to feel like you actually own a piece of whatever company, then when you buy stock in that company, you actually own a little piece of that company. So that might be important to you. And that is a potential pro of trading stock over options. Okay, now let's talk about some cons of trading stocks over options. The biggest con, in my opinion, is that it requires much more of a time commitment regarding the research phase of the process before you make your purchase. What I mean by this is if you don't do your research about individual companies, then you're probably going to miss a majority of the big moves that happen. And what I mean is, like for me, I do not trade stocks actively. I do own some stocks, and those particular stocks that I own, I do what I just described a minute ago. I just set it and forget it. It's like I bought some shares. A lot of days will go by and I don't even look at what's happening with the shares because I've set alerts on higher and lower price levels. And so unless the stock price breaks above or below these longer term alerts that I've set, I don't even pay attention to the stock price because I'm thinking about the stocks that I own in a longer term investment. If you watch CNBC or Bloomberg, or you go online and look at different websites like MarketWatch or Seeking Alpha or whatever, a lot of times you will see certain stock tickers listed that had a huge day and you'll go, I've never even heard about that stock before. And you've never heard about that stock before because you didn't do the research into that stock. And so that's what I'm saying about needing to put in a lot more time doing research before you get in on certain stocks. Because if you don't get into the stock until you've already heard about it, meaning a relatively lesser known stock that just made a gigantic move, and then you hear about it because the sites you look at or the podcasts you listen to or whatever talk about it, it means that the majority of the move has already been made for the immediate time being. And sure, there might be more upside like a year from now, but the move that's to be made right now in the immediate time frame has just been made. And that means that you're not going to benefit from any of this move because it's just happened and you missed it. So that's why I'm saying you need to do a lot more research on the front end when you're trading stocks so that you can find the opportunities that are about to break out before they actually break out. And so if you're somebody who loves doing research, it's fun for you. You like, like searching through endless tickers and looking at all of them on the graphs and, charting them and whatnot, and you like that, then that can be a plus for you because it's, it might be fun for you to do. For me personally, I don't like to spend a lot of time trying to research brand new tickers that I've never heard of before. I'd rather trade the options on tickers that I'm already very familiar with. So that's what I like to do. It's just a personal preference. So for me, it's a con to have to do a lot of research on individual tickers to try to find the one that's about to break out. For you, this could be a positive. The next con of trading stocks over options is that normally you have to be in the position for a much longer time frame before you see any big profits. Now with options, it's very, very easy to make thousands of dollars in one day on moves that don't really look like they're all that significant on a chart, but actually still make you a lot of money. And that's why I like options. With stocks, definitely like the blue chip stocks, it takes you a lot longer to make the move actually make sense for your profit. Now, what I mean is, and I'll get into this in a second when I talk about leverage, but since when you buy the individual stock, it costs more money to buy one share of an individual stock as opposed to a leveraged buy of multiple shares of the stock with one options contract. That means that you need your one share of the stock to move a lot more than you actually need your options contract to move, since your one options contract is controlling 100 shares of the underlying stock. So you just need to think about things in a much longer time frame. And like I said, if you're in it for the long haul and you found a company that you believe in, you like the price of the stock, you think it's going to move to the upside, and you're happy to stay in it for months or even years and see what happens, then great. But that's not something that I personally like to do. And then finally, a con of buying stocks over buying options is when you buy stock in a company, you only want the price to go up. You're only making a profit when you buy stock in a company and the price goes up, because that's how you make money. You have equity, you have an equity position in the company, and you make money when the company does well. If the company does poorly and the stock price loses value, you have lost value. Whereas if you're buying options, you can see that the stock is trending down and you can simply buy a put option rather than a call option, and you can make money as the stock price falls, as opposed to only being able to make money when the stock price rises if you buy shares of a company. Okay, now let's talk about the pros of trading options over stocks. I got into this briefly already, but the biggest pro, in my opinion, is leverage. One contract, one options contract, controls 100 shares of the underlying stock. So when you buy one share of stock, that's it. It's one share of the stock. And whatever the stock price is, you buy one piece of that company. Whereas an options contract, you are controlling 100 shares of the underlying stock. And basically what it means is you're buying the right, but not the responsibility to purchase the stock at the strike price you chose at or before the expiration of that options contract. So essentially, to put it in layman's terms that are fairly easy for anybody to understand, even if this whole underlying shares and options right to control whatever is confusing to you, this is an easy way to think about it. Think about leasing a car rather than buying one. So for example, let's look at a Mercedes-Benz SUV. It might cost you $60,000 to buy a brand new Mercedes-Benz SUV. You might not be able to afford a $60,000 Mercedes-Benz SUV. But if you want to lease that same SUV, it might cost you $400 or $500 per month to lease that SUV. And that you can afford. Now, you're not owning the car the way you own the car when you purchase it, but you also don't have to come up with $60,000 or, finance $60,000 worth of car. So in that respect, you need less capital up front to be able to get into the markets. A good example of this is the SPY. Let's look at the SPY ETF. If you wanted to buy one share of SPY ETF, at this moment right now, it would cost you $607 to buy one share of the SPY. But if you wanted to buy one at the money call option on SPY with 1 day until expiration, that will cost you somewhere around $100, maybe $150. So it's 6 times cheaper to simply buy the option than buy the share of the stock, or in this case, the ETF. So that's, in my opinion, the biggest pro of trading options over stocks. The next pro, which I had already touched on briefly, you're not tied to any particular direction when you trade options. So like I just said, when you buy equity in a company, you obviously want that company to do really well, and you want the stock price to go up. That's the only thing you want, because as the company does well, you do well, you make money. That's what you want. When you buy options, if you think that the price of a stock is going to fall in a particular company, you can decide to buy put options. And in that case, you make money when the stock price actually falls. So you're not tied to a particular direction when you trade options rather than stocks. So that's another pro about options. Third pro of trading options over stocks is daily income. So like I just said about the leverage, because you are leveraged, you can trade a lot more options contracts and you can make a lot more money in a quicker time frame than you can simply trading the underlying stock. So it's definitely a good thing if you're trying to make daily income and say, I'm trying to make $200 a day, $300, $400, $1,000, whatever your number is. And you say, I want to pull in a certain amount of money per day from my trading. It's definitely much easier to do that when you trade options rather than simply trade stocks, because of the leverage that you will get by controlling a larger portion of the underlying shares with each one options contract that you buy on a particular stock. And lastly, another pro of trading options over stocks is that, like I said a little bit earlier, there's less front-end research required. And so what I mean is, basically, when you're trading options, honestly, I've been doing this full-time for years now. It's my only source of income. It's how I make all my money. And I make a very nice yearly income doing this. And I basically only trade the Mag 7 and the SPY and the Q and the IWM, which is the Russell, and sometimes a handful of other slightly smaller but well-known stocks that are falling outside of the Mag 7. But essentially, about 10 to 15 different tickers. That's all I trade. And I never trade anything besides that. And so I don't need to do a bunch of research every day, going into all these different directions and trying to find these obscure small companies that nobody's ever heard of that are like penny stocks now, but I'm hoping that it blows up and say like, oh, the stock price will go from 10 cents to 70 cents and then I'll make thousands of dollars. Yeah, it's totally possible to do that. You can make a lot of money trading stocks, just like you can make a lot of money trading a lot of different things in a lot of different ways. You can trade Forex, you can trade crypto, you can trade whatever. Like, you can make money trading everything. I'm just telling you the way that I do it that makes me a lot of money every day in a very simple and straightforward way. And for me, the fact that I don't have to do daily research every morning, I mean, I just wake up about a half hour before the market opens and I take a look at my 10 to 12 different tickers that I'm trying to focus on each day, and I see which ones look the best to me based on what's happening on the charts pre-market and on the daily chart. And that's all I need to do. And so having less upfront research every day means that I have a lot more free time in the day. I don't have to spend my afternoons doing like detective sleuth work, trying to discover the next thing that's about to break out. I just focus on SPY, Q, IWM, Magnificent Seven, and a couple of others like, AMD, MU, Intel, sometimes Walmart. I mean, it just depends. But it's a very, very limited scope of stocks that I'm looking at every day. And so the fact that I don't have to do this deep dive into all these small companies means that I have a ton of extra free time in my day every single day. And I love that because I got into this to have more time and more freedom. And having to do less research and detective work definitely gives me more freedom. Okay, and finally, let's talk about the cons of trading options over stocks. And there are some cons. Even though I've made it very obvious that I prefer options to stocks, there are definitely some cons to trading options. The first one, the most obvious one, the biggest one that's going to affect your profits is time decay. What this means is every single options contract that you buy starts losing money the second that you purchase it from time decay. And therefore, the closer that you get to the expiration of your options contract, the more value you've lost. And a good way to visualize this is, let's say that it's Monday and you bought one options contract on Amazon that expires that Friday. So you've got Monday, Tuesday, Wednesday, Thursday, Friday. You have 5 days of time until your expiration. This is known as theta decay. Time decay is theta decay. And what it is it's the amount that the options contract will depreciate even if there's no other movement in the stock price. So although this is a theoretical example and this would never actually happen in real life, if you bought an options contract on 11 a.m. on Monday with an expiration of the end of day on Friday, and the price went completely flat all week long and it never even changed value, not even 1 cent, your options contract would still be worth a lot less money on Friday than it was worth on Monday at 11 a.m. when you bought it. This is because of theta decay. And so because of this, you always need to be very aware of the amount of time that you have left in your option until expiration. So you can't just set it and forget it the way that you can with stocks. If you're in stocks for the long term, you might buy a stock one day and be like, I'm going to try and hold it for 6 months. I mean, you can buy a 6-month out options contract, but that options contract is going to be pretty expensive. And so in order to get the benefit of being able to control a larger portion of the shares, you want less expensive options contracts, and less expensive contracts are always the ones with a nearer expiration date. If you look at SPY or Q or IWM or any other ETF that has like daily expirations, you look at the SPY, for example, you look at a strike price for a tomorrow expiration, that will always be less expensive than the same strike price, but 2 days out. And the one 2 days out will always be less expensive than the same strike price, but 5 days out, and 2 weeks out, and 1 month out, and on and on and on. So the more time you give yourself, the more expensive the options contract is going to be. And that's how time decay works. So that's the biggest con of trading options, is the fact that you always need to be extremely aware of the fact that you're losing value every single minute of every day that you hold that options contract open. All right, so number 2, the second con of trading options as opposed to stocks is, while you need to have more of a hands-on time commitment in the pre-trading phase when you're trading stocks, you actually need to have more hands-on time required while you were in the position when you're trading options. So you can't just open up an options contract and then go do something else and be like, oh, I'll check it, a couple hours from now. That's not how it works. You need to be ready to pay attention to your screen, basically from the minute that you open up your contract until the minute that you close your contract. If it's 9 a.m. and you have a doctor's appointment that you need to leave the house and go to in 15 minutes, don't open up a contract 10 minutes before you need to leave the house and go do something else. Make sure that you have the time that you can put into watching the trade unfold from open until close. Now, you can scalp your positions, meaning you're in and out in just a few minutes. There's plenty of days where I do all of my trading in 15 minutes or 20 minutes, and I'm completely done for the day. And then there's other days where my trades might last me all day long, and I close a number of my positions like within the first hour, and then I'll keep a very small portion of my contracts open, but I'll keep checking on them throughout the day. And so what I'm saying is that you need to make sure that you're always connected to your trade when you trade options, and you don't necessarily need to do that when you trade stocks. And so that's another con of trading options. And the third con of trading options, now this is just a flip side of one of the pros of trading options, which is leverage. So remember, leverage works both ways. And while you can use leverage to make a lot more money than you would have made simply trading the underlying stock, that can also lose you a lot more money than you would have lost if you were only trading the underlying stock. So here's an example of that. Let's say you buy one call options contract on the SPY, and you've got 2 days until expiration. If you buy that one contract on the SPY, you've got 2 days worth of time before it's expired. So you have to sell your contract within 2 days, and then it's going to expire. Let's say that the price suddenly falls out on you. There's a couple huge, big red candles, and you've suddenly lost a lot of value on that options contract. You're in a much more precarious position now than if you had simply bought one share of SPY. Because if you bought one share of SPY, there's no time limit on that. You could hold that one share of SPY for 10 years if you want. So the fact that you see a couple of huge red candles for the next hour or even the next day doesn't really matter, because you're thinking, well, in the long term, I'm very confident that SPY is going to come back around, and sooner or later, it might be next month, it might be 3 months from now, but I'm confident SPY is going to gain in value, and sooner or later, I'm going to be able to sell my one share of SPY and make a nice little profit. Well, if you're in the options contract, rather than owning the underlying share of SPY, then you are basically screwed if you have an entire day of price action that goes against you and you've only got 2 days until expiration. I mean, at that point, you basically will have needed to close out your position for a loss, and there's nothing you can do about that. So that is one potential con of trading options, and that is leverage works both ways. So just be very, very careful that you stay on top of your timing when you trade options rather than the underlying stock. Okay, finally, to wrap up this portion of the video right now, who should trade options? People who don't want to research a bunch of obscure small companies and who are happy to trade the major ETFs and the Mag 7 stocks will be much better off trading options rather than the underlying stock. You have to do a lot less research. You don't need to be necessarily as precise in timing exactly when a huge move will occur, because you're going to be controlling a larger portion of the underlying stock. So you'll have more contracts to work with the same amount of capital. And therefore, you've got more chances to get it right, basically. Like I just mentioned, because you're controlling a larger underlying share of stocks when you control options contracts, then you can close out your positions one by one while you're working with the trend as it goes in your favor, and you're making money every single day. If you want to, you can take that money and transfer it into your bank account at the end of each day. Now, what I like to do is I like to transfer money out of my day trading account basically at the end of each month, because that's how I pay all my bills, and that's how I fund some of my other long-term investments. I have a day trading account, and then I have other investments, which are long-term investments. And then obviously I have to pay my mortgages and my bills and stuff like that. So what I like to do is I like to just keep on building up the day trading account throughout the month. And then at the end of the month, whatever my profit is that I feel like transferring, I'll transfer that to my other savings and investment accounts. And the money just grows and grows each and every month. But there's basically a daily income each day. If you really wanted to take your money and transfer it at the end of each day, you could do that. So you could make $400 a day, and at the end of the day, you could put in a transfer that day to move that money from your day trading account to your bank account. And then the next day, that money will be in your bank account. You can do that if you want. So that's a really nice thing about trading options is having more money that you can transfer each and every day. Now, yes, of course, you could trade stocks and you could move the money that you made from your stocks each and every day. But like I've just gotten finished explaining in this video, you're more likely to make a larger chunk of money each day when you trade the options over the stocks. And lastly, who should trade options? People who have the time, the willingness, and the desire to stay involved in the trade from the moment you open it until the moment that you close it. This is not something that is ideal for somebody working a full-time day job who cannot pay any attention to the markets during market hours. If you only have like a couple of minutes on a break or whatever to check in with your options, it can be done, but it's certainly not ideal. If you are required to be in a job all throughout the normal daily trading hours, I would highly suggest you either do a longer term swing trading type of approach or just do an investing approach and just buy stocks and then be happy with a longer term appreciation where you don't need to be hyper focused and involved on your screens every minute of the trade from the time that you open until the time that you close the trade. And finally, who is better trading stocks rather than options? Like I just alluded to, if you're super busy and you don't have time to pay attention to your screens, then it's probably a good idea that you trade the stocks rather than the options, and you simply invest in big blue chip companies that you think are going to have a lot of upside over time, and you put your money into those companies and you're okay with just letting it sit there and grow over months or years of time. And people who are not necessarily needing a actual income on a daily or monthly basis are better suited to trading stocks. Perhaps you have a well-paying job already that you enjoy going to, and you think, well, I don't need to be a full-time day trader, or I don't even really want to be a full-time day trader, but I still want to get into investing and make money off of the stock market. If this is you, then it's probably a better idea that you just buy some really nice big blue chip stocks and hold them for a longer period of time. It's going to be less hassle, less worry for you, and you won't have to really worry so much about it. And the other type of person who might be better suited to trading stocks is if you're the type of person who loves doing detective work and you love crunching numbers and you love trying to uncover these sort of obscure or forgotten about smaller companies that you think nobody else has heard of yet, that are just about on the way to making a huge breakout to the upside, and you think, oh, this is my chance to really get in on the ground floor of something big, and I want to own a piece of this company and then watch it skyrocket, then this might be a good option for you if you're the type of person who enjoys doing this. And that about wraps it up for my take on the pros and cons of trading options versus trading stock. And before I actually finish this video, I'm going to do a quick screen share, and I'm going to talk about the company Palantir as an example of what might have happened over the last 6 months if you were trading the stock versus trading the options. And in doing so, I'm going to make another case for why I personally believe options are the way to go over simply trading the stock. So let's get into that right now, and then I will explain to you everything that I'm thinking as we go. Okay, so here we are taking a look at the weekly chart for Palantir. And I'm using this as an example because we've seen a very, very nice large move to the upside from about the middle of this year all the way to right now. And I'm going to talk about the difference in the amount of money that you can make and the speed in which you can make that money, the difference trading options versus just simply holding the stock. Now, for example, let's say that now this is all the way back in 2021. This dotted line right here, this is the start of 2021. So let's say that just for the sake of argument, you're looking to buy stock in Palantir and you were just waiting for this moment when price really broke up above the 200 EMA and looked like it was really starting to trend upwards. So let's say that you waited for it to sort of come down and bounce off of this 50 EMA and then come back. So you wanted to make sure that this wasn't a fake out. You wanted to see that it had actual real upside potential that was sort of more corroborated. So you waited until, let's say, right here to get in. And if you see my price, my price right here is 1484. If you move your eyes all the way over to the right side of the screen, you can see that we're at 1484. So just for the sake of argument and to make the math easy, let's say you get in at a share price of $15 per share. Let's say that you have $2,000 that you want to invest. So 2,000, you've got $2,000. So let's divide $2,000 by 15 because that's the price of each share. You get 133. So you can buy 133 shares. Let's just simplify it and make it 130. So you've bought 130 shares. Now, let's say you held all of those 130 shares all the way up until just last week. You see this gigantic green candle last week and you say, well, it's almost the end of the year. I've made a nice amount of money. I'm going to cash out and I'm going to take my profits that I've made for holding this stock for over a year. You've got 133 shares. And let's say for the sake of argument that you sell at a price of $70 per share. So if you can see my cursor right here, somewhere within this gigantic green candle, we're playing around at the $70 mark. So let's say you sell for $70 a share. So you've got 70 times 130 shares. That's $9,100. So $9,100 approximately, that's your profit in holding this amount of shares of one company for over a year. And nobody's going to argue that that's not a nice amount of money. I mean, $9,000 is a great profit. So if you did that, you would have done very well simply just holding on to Palantir over an entire year and making $9,000 off of that one stock. And you wouldn't have to worry about any sort of time decay as you held on to that stock. But here's the thing. It is relatively easy to make $9,000 in 1 week simply trading options when you know what you're doing. And you don't even need a really large account to do it. To make $9,000 in 1 week, I would say you would need a larger account than a $2,000 account. That's honestly not really enough to get you there unless you either got really, really lucky or traded perfectly or both. But if you've got like $5,000 in your trading account and you're willing to be a little bit aggressive in your trading, you can absolutely make $9,000 in 1 week. I mean, I've made $9,000 in one day on multiple occasions, just trading the way that I normally trade. And so the fact that you need to hold a stock so much longer to make as much money as you would be able to make in a much shorter time frame when you trade options. That's the main reason why I prefer trading options over stocks. Now, of course, if you simply want to buy and hold a stock, that's a completely different story. If you see something on a chart, like if you're looking at a weekly chart and you see something that looks particularly good, like just for example, just today, I actually bought 5 shares of MU because I saw something that looked really attractive to me on the weekly chart of MU. And it's something where I don't believe that MU is going to move quickly. And I don't trust that I could get in on MU right now and then get out by this Friday and make a lot of money on my options. But I do think that over time, MU could really appreciate in value. So I was happy to spend like $600 buying 5 shares of MU and essentially just parking that money, knowing that I'm not even really going to think about it until it reaches my price target, which might take months or even well into next year before that happens. And so you can do both. You can have stocks that you have invested in with the idea that I'm not even thinking about actively trading this. I'm thinking about just holding it, and then I'll come back to it. Just let me just show you exactly what I'm talking about, and I'll show you why I decided to get in. We're looking at the weekly chart on MU. So normally I don't really pay attention to the squeeze indicator on a intraday chart. I don't look at squeeze on short time frames. I basically only reference the squeeze indicator when I'm looking at either daily or weekly charts. But this weekly chart with the squeeze indicator looks really good to me right now because we see this, we sort of created this wedge, and the actual histogram is looking good in terms of its coming back up. We've got these 3 red dots, which means that the pressure is building. What's going to happen is price is either going to explode to the upside or the downside soon, and I'm betting that it's going to break out to the upside. So I just bought 5 shares of MU thinking it might not happen this week or this month or even next month. But the way that I'm seeing the RSI on the volume, the way that I'm seeing this histogram sort of shape up right here, we're in the squeeze right now. The money flow has come up above the 0 line, which means that money's coming in. It's looking good to me. You can see I made a couple of trend lines and basically, formed out this wedge shape right here with my trend. But I'm really looking to come to the upside here, and I think that that's going to happen. And although I'm not like massively confident that that's going to happen, I'm certainly confident enough that I'm willing to drop $600 on it and just basically just park that money and see what happens. So that's an example of how you can do active day trading every day, which is what I do. I mean, I'm day trading every day still. And at the same time, you can do a little bit of investing by buying stocks with the idea that you're just going to hold them for a longer period of time. All right, we're back. I hope you enjoyed that quick little breakdown. And, like I said, I mean, I'm definitely still here. I'm still trading every single day. I am for sure not going to quit making videos. I just want to make sure that I don't repeat myself. So therefore, I'm not going to make the same types of videos over and over again. And because of this, my output moving forward will probably be a little bit less than my output has been up until this point, because I feel like I've already said a lot of what I really need to say about my strategy. And, so you can just watch a lot of the old videos on this channel and find much of my core strategy. And if you want to go to lonewolftradingclub.com, you can find my 2 full video courses that talk about exactly what I do every day in my options day trading to make my full-time income every year. I don't have any other job. This is all that I do, just day trading. That's how I make all my money. Or you can get one of my 2 books that I've written. Both of those books are available on Amazon.com. And, like I said, I'm going to keep on making videos, but I'm just going to wait until I actually see something new that I want to talk about. So whenever there happens to be, either a slight tweak in my strategy that I've discovered, or possibly a new indicator that I've started using that I like, or maybe I have, just some blockbuster day and I want to explain how and why my day was so amazing, I'll do that. But until next time, whenever that may be, you can always write me an email. I'm still available to anybody if you've got any questions or comments or just want to talk about how your trading has been going. So until next time, thanks again for everything, and good luck with your trading moving forward. And I'll talk to you next time I talk to you. Take care, everybody.